Hey team, it's Mikey Millions here, and after many long weeks, we are finally ready to kick off Season 2, Episode 2 of the Robinhood 3K Challenge. And right off the top, if you guys enjoy this series, please go ahead and give this video a thumbs up. It really helps me out with the algorithm, so YouTube puts this series in front of more viewers. With your help, we can propel the good word of Theta Gang and the 3K Challenge to new heights. For those that are curious about why this episode took so long, well, it would have been done like 15 days ago, except my god-blessed daughter Becky decided to eat my microphone and completely destroyed it. Which is pretty impressive when you look at it. I mean, this thing is a pretty solid piece of hardware, so to break it with spit, you gotta really be chewing on that thing. So congratulations to Becky on her phenomenal teething ability. She got a few new teeth this month, and all she had to do for some relief is break Daddy's mic. Anyway, your Patreon contributions were more than adequate to buy me a HyperX Quadcast real YouTuber mic. So I'm back in the game, and this time with better gear. And as a side effect of all this episode is going to be long as fuck. Now let's get started. I dedicate this episode to Becky, without whom this video would have been done weeks ago. At the end of episode 1, we closed just below $2,600, a substantial recovery after JPOW crushed my puts in last season's finale and drove my account to a low of $1,776. We made some serious progress in episode 1 to recover from last season's catastrophic YOLO. Theta farming with PMCCs was critical, and turning to GameStop after a bad Starbucks date was the real driver that propelled the account higher to end the episode on a good note on August 21st. But in between episodes, things got a little uglier, and I took some shaft. Theta farming GameStop, Snap, AT&T, and GE did have pretty good results through August initially, pushing my account to over $2,850 at its high. For a minute there, I thought I was going to break $3,000 between episodes and miss that magic moment. But then September happened, and if we look on the bright side, well, at least I've got another shot to break $3,000 with some panache. While August was a great month for stocks, September was a little less kind to the market, and my account suffered the brunt of it. The market dragged me back down, but a good amount of this was my fault because I used the TLS strategy. The real homies that were around last season know what TLS stands for. But for those who don't, the TLS strategy stands for trading like shit. I used the TLS strategy between episodes, which we'll get into in a minute. We're kicking off episode 2 on September 24th with an account value of $2,404 and change. This setback is indeed a kick in the dick. I'm over $400 from this season's top after September took me home, then hit me over the head with a lamp and stole all my money. But today is a new day, and we are by no means dead yet. Anyway, here's what's going on in our portfolio as we kick off. Between episodes, we've had the Theta Farm going, and it's definitely been the backbone of the portfolio. Starting with the good stuff, the king right now is Snap. The stock has been doing really well and bringing a lot of money to the PMCC farm, and we're looking at $138 of gains from Snap in between episodes. I took a longer dated short call expiring at the end of October before the next harvest, and if things go according to plan, we'll be looking at a further gain of another $220. For those looking for a stock to farm, I strongly recommend Snap. GameStop has also been phenomenal. Obviously, we saw a huge move on GameStop, and I did get a large chunk of this profit. Unfortunately, one of the risks of the PMCC is that if the stock goes too high, you start missing out on bigger gains and can even lose money. In my case, I had to uproot GameStop from my farm and take profits. My effective sale price was about $7.50. I should have held a longer bullish position, but honestly I didn't expect GameStop to go to $10 in a month, and I missed some of this mad rush, although I still walked out of GameStop with a big profit. I don't know precisely how much since the beginning last year because I wasn't tracking it, but since last episode, I made $154 from the farm and another $155 from the shares, so just a touch under $300 gain since last episode. I will be looking to replant GameStop later on a pullback. I did some fundamental analysis of GameStop in my neighborhood, and I was impressed by the hype right now. Here's me in my COVID disguise outside GameStop, and look at this big ass line whipping around the corner. I haven't seen lines like this since Halo 3 was released. Everyone is trying to get their hands on Super Mario 23, and they're willing to wait for it. This is going to be good for GameStop, so I'm going to replant this later. I just need to get it at the right price. Although Snap and GameStop have been good shit, farming is not easy, and these two other dipshit boomer stocks did me dirty. Some locust came through my farm and ripped up the AT&T crop, I mean, AT&T is acting like COVID didn't get canceled and dropped all the way down to just above the March 23rd lows. This crop produced no fruit, and even after factoring in my meager covered call profit, I lost over $250 on this boomer trash. I took the L, uprooted the plot, and I'm not going back. Lesson learned, you need to farm stocks with a decent amount of volatility that also go up instead of just down. Real talk, if your stock's volatility is too low, the premiums on the short call cannot compensate for the risk on the leaps, making them bad choices of crop. We'll get more into that in the eventual PMCC video. And just like AT&T, GE took me to the woodshed, but this time it was mostly my fault. I was sick of getting weak-ass premiums from GE, and I sold a call below the strike on my leaps. The Trap House team knows that is against the rules. I always tell people, do not sell short calls below your leaps. And what did my stupid ass do? Sold a short call below my leaps to squeeze out like an extra $8 of premium. And wouldn't you know it, GE rocketed up on some half-baked promise that the company was still trying to make money, to everyone's surprise. I started losing money as soon as GE broke my short call, and by the time it was done climbing, I was down $150. So what did I do? I rolled, and lost another $48. Then I threw in the towel and took the whole $198 loss, feeling like some WSB scrub. This method of compounding your losses is the trading like shit strategy, and it was totally avoidable if I just didn't sell a short call below my leaps. Why did I do that? It was pure stupidity. And just to twist the knife, GE went right back down after I closed the spread. It would have cut my loss down to about $100. GE is off the farm now, and good riddance. Piece of trash boomer stock anyway. And last in-between episode change to the farm, I took the leftover premium from GE and T and bought a leaps on Lyft expiring in December. The volatility was what I needed, and I could safely sell covered calls a few strikes out of the money and still receive a worthwhile premium. Unfortunately, I bought right here before the big slump, so my shit got rocked right off the bat. And apparently there's some legislation pending that would force Lyft and Uber to start treating drivers like humans instead of equipment, but Lyft is really fighting against it with Prop 22. It looks like Lyft and Uber are about to lose this fight, and I don't think they'll ever be profitable if they do. I'm skeptical about using Lyft, but I'll hold for another week or two and see where it goes. So that's our farm right now. Just one snap crop and one Lyft crop. But we've got a good chunk of cash, which is plenty to do whatever we want to this episode, which may mean replanting GameStop. Alright, enough of that in-between episodes nonsense. We've got a show to perform, beginning here on September 24th. Looking at last episode's votes, it looks like PENN National Gaming, ticker PENN, narrowly beat out Apple for my episode 2 ticker, so it appears that we are going to be rolling some dice, which is basically what buying options is anyway. Congratulations to Sam Kling with the winning vote. PENN National Gaming integrates both physical casinos, online gambling, and sports betting. Basically, they service the ways people satisfy their gambling addiction before they find WallStreetBets. But doing some technical analysis, I don't know what to make of this. I really don't see a reason why we had this strong day on Friday when all the signs seem to point down, especially with this looming bearish crossover on the MACD. And not only that, but volume was absurdly high on Friday. I know the market overall was green, but something about this isn't sitting right for me. My technical analysis tools tell me not to trade this, but I'm going to, since it won a Democratic vote and I am a man of the people. I just have to call in some backup. Another trader, Solopreneur, actually did an analysis video of PENN last week, and it was pretty freaking close. He called the top here at around 75 and recommended a buy point at around 60. PENN didn't get quite that low, but it did close on Thursday within 1% of that, and then on Friday went flying. So Solopreneur's analysis was pretty solid. He does fancier TA than I do, and he uses Fibonacci's and Bollinger Bands and all that other astrology. So where my TA fails, I bet his will succeed a second time. So I'm going to connect with him and request an update video. And since we comment on each other's videos all the time, I'm sure he's down to make an update. And he's going to do one. He responded in like 2 minutes. So I'm using a lifeline here. Solopreneur, help me out.
Hey guys, before we get going, pretty closely with this 23.6% Fibonacci level. So I do think that this is going to be a strong area of support right now at about 58, 59, 60. But I am scared to the top side, and I am scared to the downside up until about 58, 59, 60. So I think this price level is going to be a very strong support. Again,
where Solo goes, I go. That's all I'm saying. And his analysis is pretty clearly indicating that an iron condor is the way to go. So let's lay it on. Following Solopreneur's analysis, I'm going to open up PENN options and flip to October 9th. And then I will sell a call pretty far out of the money at the $76 strike for about $179. And then I'll buy the $78 call for about $136. That's about $34 max gain on the call's wing for $200 collateral. And now I'll set up the puts wing. We'll stay a bit closer to the market price because we're likely in the lower part of PENN's trading channel now. So I'll sell the $67 put for $276, and then buy the $65 put for $202. That will award approximately $74 from the put swing. And this requires $200 collateral total, so overall we'll be looking at a max gain of about 117 and a max loss of around 83. Of course, that depends on if I can actually get a fill at this price, which will be difficult because it's a multi-leg strategy on Robinhood. Also, if you have no idea what just happened, check out the Iron Condor video, which I'll link to you in the teaser text above. Condors are a big IQ move, so let's lock this one in, take this momentum, and swing for the fences with my next trade. Now, where do I find inspiration? Pretty much out of nowhere, the Bravery hit me up on Discord and offered me a pizza if I agreed to trade dominoes this episode. And you know what I said? I said, yes. And no shit, my man actually sent me $15 to Domino's. I already used the card, so don't bother trying to copy the code. In fact, I got a bomb-ass pepperoni pizza on the house. All I had to do was tip the driver. So when it comes to trading Domino's, first thing I notice is that the prices have gone up recently, which is bad for the consumer, but demonstrates pricing power from the company. They no longer need the 555 deal. So from the investor's point of view, that's bullish. The cheese on the pizza hit that sweet spot where it was not too stretchy, but had the softness that we look for, so that's also bullish. The pepperoni slices were adequate, but nothing special. In fact, they probably could have benefited from a higher number of slices, so that's slightly bearish. And of course, the crust is the real key. It was slightly oily, but that's because the toppings came right up on the edge, so we got the most actual pizza instead of a big pile of crust. I'm calling that one bullish. Now, there's no need to do any technical analysis because I just did fundamental analysis. But the most important factor in my approach to Domino's Pizza is that we have earnings coming up on October 8th. Any kind of assessment or analysis goes right out the window when there's no telling how the market will react to earnings. So I'm going to play a Lottofly here and bank on IV Crush. For those who saw the Ironfly video, you'll know the basics of a Lottofly already. A Lottofly is an iron butterfly with very tight strikes, so that your reward to risk ratio is usually 10 to 1 or higher. However, the probability of the stock landing within such small wings is very low. For a $15 trade, this is my ideal approach. In my case, I'm going to open up Domino's and select trade options, and I will open the October 9th chain because I want the expiration to be right after the catalyst so I can benefit from IV Crush. I will set an Ironfly with the short strikes at 420 since that's a lucky number, and pizza and weed go together. And then I'm going to buy the next strike in both directions. Robinhood is going to have no idea what a fair price will be for this spread since the bid to ask spread is very wide. Since my strikes are $2.50 apart, the collateral for this spread is $250. So I will ask Robinhood for $235 credit, which would make my max loss $15 and my max gain $235. I need Domino's to close on the 9th between 417.65 and 422.35 for this spread to be profitable. Anything outside of this tight range will be a loss, up to a max of $15. Very low max loss, but also very tight probability range. My max gain is over 15 times higher than my max loss, so this is a worthwhile risk for me. Let's buckle in and await earnings. Alright team, it's Saturday, October 3rd. Obviously the market is closed today, so we'll do a halfway point update. I'm actually at work right now at about 1:30 a.m., but this is what I do on my work breaks these days, and I do it for you. Anyway, the market has been up and down all week, and in some ways that actually helped out my portfolio. but we're obviously looking at a very zigzaggy pattern here due to Robinhood's price representation on flies and condors. We're at $25.42 and change in this account, so up about $140 from our nasty low in late September, but still well off our highs from late August. I think the true value of this account is at least $30 higher than this due to the bad price representation on the Domino's position, and we'll get into that in a minute. I harvested $33 from Lyft on the Theta Farm this week, but unfortunately the leaps dropped in value by about the same amount, so I'm more or less coming up even. The delta on the leaps is still around 68, so we are suitable to continue farming, and I'll likely target the $29 short call for $66 premium over the next 2 weeks and look for some upside. But so far, Lyft has not been a good crop. This contrasts sharply with Snap, which is a phenomenal crop. Snap's next short call still has a few weeks left on it. Right now, this is still in the money on the short call, but $1.30 of this is extrinsic value, so we will see some help from theta decay over the next few weeks. Delta on the leaps is 0.8, and I've got 13 shares providing 13 more delta to the long side, compared to a 0.69 on the short call, so I don't anticipate having any issues if Snap keeps rising. I just have to let some time pass for the harvest on Snap. And if I'm lucky, Snap may even come down a little bit, although that doesn't seem to be the way it wants to go lately. Other than the farm, we've got the Domino's fly and PENN condors open. These two with their funky price representation are the cause of my account looking like a zipper this week. PENN jerked around inside my short strikes all week, but the premium was very slow in coming off. We finally started to see some favorable pricing at the end of the week, ending with a value of $84, and we are up a respectable 20%, or $21. I am planning on taking profits at 50%, and Theta ought to be really kicking this week with expiration on Friday. What I'm not going to do is make the same mistake I made with Starbucks in episode 1 and hold out for a 100% gain, only to lose it all in one bad day at the end of the week. I'm not trying to do that, so I'll take profits early. And then of course there's Domino's, my Lottofly, for which I got filled at $2.38. It's currently priced at $2.80, which makes no sense since the maximum value on the spread is $2.50. The represented value looks like an EKG strip on a tachycardia patient, but I am positive this is just Robinhood's wonky price representation in action, since it mathematically cannot be valued above $2.50. I suspect the true value of this Lottofly has barely moved since I opened it, since that's just how Lottoflies work. Remember, I chose 420 as the strike on this Lottofly because it's good luck, but with Domino's trading at about 433 right now, I'll likely be counting on some weakness from Friday's earnings report. Hopefully we wind up with another Papa John's incident, so this week's whole price rise can get cancelled. We'll wait and see. Got a lot to look forward to here. Let's close the barn and wait for Monday. Okay, it's Monday the 5th, and I just sold a covered call on Lyft again, this time for $61, but man, things are just not looking good for Lyft right now. The stock itself made a decisive move below 27, Prop 22 is looking unfavorable for these companies, and frankly, Lyft is just too popular with Robinhood users for me to feel comfortable holding this. So I'm going to uproot this jazz, take the L, and move on with my life. Loss is $247 after accounting for the premiums I grabbed on the way down. I do have one share, but holding that is basically just for fun at this point. Basis is like $270, and if Lyft ever gets that expensive, it's a pump and dump. On the more positive side, PENN is looking real good right within our iron condor, and if it stays here, we'll be at max gain. Domino's is about $8 above my 420 strike, but with earnings on Thursday morning, that Lottofly is still in play. Exciting rest of the week coming up, and I'm feeling optimistic despite this Lyft fiasco. Well, never mind, it's Tuesday the 6th, and Mango just tweeted that all stimulus is canceled, and he instructed his party not to do any more stimulus until after the election, when he will surely give us stimulus. Well, Donnie, you know what I haven't had in months that I'm really craving right now? Stimulus. And this no stimulus order is just not sitting well with the market. The market dropped immediately on this news, and PENN got shafted. After being up just under 50% at around 3 p.m. when I was getting ready to bail for a big gain, I'm bailing on this iron condor now and looking for a close at $78. I'll actually get filled at $82, which is a gain of $23 total, or 22%. I wish I could have seen this coming and gotten out earlier in the day when I was up $50, but I didn't quite reach that 50% goal before Donald rage tweeted. Getting out with this smaller gain is disappointing, but cash is cash. And now it's up to Domino's to cap this episode off. We'll await the 8th. So far, Yahoo Finance forums seem very bullish on Domino's, so that's a good sign this thing will tank, just like I need. Hopefully, just not too much. If Domino's closes at exactly 420, I'll make $238. Anything outside of 417.50 and 422.50, I'll suffer the max loss of $12. Alright, it's the big day, October 8th. The earnings announcement is due before market hours, so I'm just sitting here making memes while I await Domino's earnings. I need some significant pullback here of about $11 for my Lottofly to pay out. And here we go. Good news, Domino's is definitely going down on earnings. But unfortunately, I think the largest pizza chain might have come up so short that my Condor is about to get cucked in the other direction. Although Domino's sold so much fucking pizza this quarter, their increased revenue was no match for their mounting expenses. Domino's missed earnings per share by 30 cents, and Wall Street is not happy. It appears as though we have a bit of a red day ahead of us. I've got tomorrow left before expiration, so I guess I might as well hold on to this Lottofly now, since there's nothing else I can do with the position. I guess we'll see what happens tomorrow. It's October 9th. Will we see a rebound? Can Domino's pull it off? No. No, it cannot. $12 loss. Last thing I'll do before wrapping this episode up is plant another crop in my Theta Farm with all this cash I've got laying around doing absolutely nothing. I really want to take a very long-term position in the airline industry while it's all so cheap, and I tried several times to get into JETS, which is the ETF for the whole US airline industry and some of Canada's too. However, I couldn't get a fill on the leaps without buying right at the bid, which is about $100 loss right off the bat. I therefore decided to do something really dumb and enter a 26-month deep in the money leaps on American Airlines, which is probably the riskiest airline to own right now. However, the premiums on covered calls will be juicy, and I bet I can score a profit on this. Besides, I've got over 2 years to farm this thing. That's older than this YouTube channel. I'd better be able to make some profit off this by then. So all in all, it looks like I will break the $2,600 ceiling finally. It's been giving me a hard time, this time mostly due to self-destroying with Lyft and losing $274 in just a couple of weeks. Without that stupid ass play, I'd be at almost $2,900. So while this does hurt, it is a reminder that I can do better next time. I just have to stop trading like shit. Honestly, I'm not sure how I'm even up at all, given how shares and Snap were the only thing I had going for me. Nonetheless, I'm closing this episode just above $2,600 to notch a gain of about $199, or 8.2%, somehow. It was mostly from shares rising off the September lows, and a light gain from the PENN Condor thanks to Solopreneur. Clear skies ahead, let's keep it all moving. That's all for this episode. I hope you guys enjoyed. If you haven't already, please do consider giving me a sub and a thumbs up. It really does help the YouTube algorithm when people like the video, and I'm hoping to get the word of the 3K challenge far and wide. You guys know the drill. Make sure to comment the ticker you want to see me trade in episode 3, and I'll trade the one with the most upvotes. Thanks for watching, and I hope to see you all next time.